just recently had our company meetings as it's ending the year, and one of the things that stood out to me is we have a kind of our purpose statement. Our purpose statement kind of describes this idea of work is a big part of life, and we think it should be meaningful. And one of the things, meaning comes from understanding the why behind what we're doing. What is our personal purpose? What are we driving towards? And how does that align with our organizational success? And folks, I think that's what these calls are all about, a chance for us to come together and practice using the tools you received if you were part of one of our business acumen programs. Now, folks, if you haven't been, no worries. That's okay. This is open to anybody. We inspire you enough to say, okay, I want to take this tool and be able to assess my company if you're part of a publicly traded company. Or maybe you're in a sales role and you want to get good at understanding your customer. What are their key strategic objectives, goals? And how can a partnership with your company drive their results? For some of you, it may just be a chance to be able to understand how to assess a company as you think of your personal interest, whether that be an investment in a company or just tracking what's going on in the economy, etc. But one of our goals here at Acumen Learning is we really feel like your work life is important. And your ability to understand the why behind what a company is doing will help you align your goals, your objectives as you strive to succeed, building your credibility, building your career, and building your company. So, with that in mind, I want to make sure the tools are working well. So, make sure your chat box is open as Stephen requested. In the chat box, let's just make sure that's working, make sure it's set to everybody. And let's just put in there, where are you calling in from? My team here, we're calling in from Salt Lake City, Utah, or just a little bit of south of Salt Lake City, Utah. Our claim to fame, I guess, I always bring this up. We had a great chance to host the Winter Olympic in 2002. Can't believe that's 22 years ago. And just recently, we found out that we're going to get to host it in 2034. What a great opportunity to come and engage around our winter sports here in Utah. We're excited about that. Looks like I got people from all over. So actually, I should say good morning. Good afternoon, and for some of you, Ireland, I saw good evening wherever you're located. Glad you can come and join us and be a part of that. Well, we'll be using that chat exclusively as our communication tool as we go throughout because we have a large group on our call today. So feel free to ask questions as we go through our program. Well, the second tool I want to make sure is up and running successfully is our polling tool. We want to make this very engaging and interactive, so make sure you have your chat box and answer the polls. But let me just ask this question. My question starts with, what have you had a chance to participate in this webinar? Our monthly How to Listen to an Earnings Call webinar that we provide. Now, if you're new to this, this is a program as a continued learning beyond our courses. So an individual comes to one of our courses, they get access to these tools, and we have every month a chance for them to practice using the tools. So many of you are going to be graduates of our program. If you haven't been a part of it, that's okay. This tool can be used whether or not you've gone through our program. And it's a great resource to be able to understand the why behind what companies are doing. And then based upon that, what should you do about that? Well, as I'm looking at the group and we've got a number of people on the call, I'm going to go ahead and close the poll. It looks like for many of you, this is the first time you've actually attended. Well, welcome. Hopefully you've engaged in one of our programs. Now you're coming. If you're new, you heard about it from a friend. We're excited to have you here. Looks about 40% of us are recurring, so thank you for coming back. If I was going to offer a suggestion, how to take the information we provide in our business acumen programs and really move the needle, meaning apply it, be able to execute around it. I can't think of a better thing for the next 2 or 3 months after your program to engage in this little exercise. Now, of course, if you're publicly traded, we want you to do this quarterly around your way to practice with these tools is to gauge. We do a different company every month as a chance to get a chance to use the tools, but also to get that broader perspective of the market. For example, we do Bear today. Last month we did Visa credit card, and next month we're going to do EA Sports for all of you computer or gamers. We're going to talk about EA Sports next month, so a great one to look at. But we look at a different company every month as a great chance to continue to apply the tools and resources that we shared in the course. Well, hey, it looks like the tools are working. So let me just go ahead and jump in. I got one other quick poll question. You're coming to a program on how to listen to an earnings call. So my question is this. When's the last time you listened to an earnings call? Just go ahead and respond to that pop quiz question. I'm going to read this question on the chat box while you're answering that. Excellent. So questions come up, and my team will help you with this. The question that Yi Ling is asking is, how do we get access to this? Well, one way is right through our website. You'll get access to these monthly calls. By the way, if you can't make it, it's okay. We record them, so they're available that way. And then the second way is at the end of our program today, we're going to give you a link where we're going to get access to that tool. So you can download that. But when you get that, when you go into that link, you can actually register for next month's call. I think it's January 27th is our next one. Anyways, maybe I'll have one of my team members just put that link in so they know how to register. 2 steps ahead of me. Thank you, Stephen. There you go. Okay, so as I look at when's the last time you listened to an earnings call? This is exciting. About 60% of our members today are graduates are saying they've actually listened to one of these calls in the last year. That's awesome. In fact, there's a stat that was done. It suggested that only about 25% of employees actually listen to these calls. Now, I'm going to hopefully inspire you enough to say, you know what, I'm going to do this. I can do this. My guarantee to you is, as you do it, it absolutely will build your credibility, it will build your career, and it'll build your company. Well, excellent. So that gives us Phil. And for some of you, for those 4 people who said, I'd rather go to a dentist, again, I'm going to hopefully inspire you enough to say, I'm going to take a chance on this. Okay, well, let me share some stats. 95% of employees don't understand company strategy. Now, think about that. If this was true, this comes from a Harvard Business Review. 95% of employees don't understand corporate strategy. Here's another one. 90% of employees don't understand the key metrics. When I think of key metrics, and when people think business and financial acumen, they typically think about the financial statements. To me, the financial statements are a scoreboard. You can kind of see who won or lost. But in order to get real information, you got to know what causes that, what drives profit up or down. What are the levers that impact cash flow? How can you utilize your assets better, get greater efficiencies, et cetera? So being able to, one, understand the strategic objective by listening to your strategic communication, but second, then be able to keep score, be able to tell, are we getting better or worse? How should I think about it? And then with your functional expertise, go back and execute around that. Well, these are stats. I'm not suggesting this is where you're at. I'm not suggesting this is where your team is at. These are Harvard studies we've done, et cetera, that kind of speak to what we really know about our strategy in most companies and how well we understand the key metrics and measures. Well, imagine you're the CEO of Bear, Mr. Bill Anderson, and these stats are at present. 25% potentially of employees, that's kind of the percent that actually listen to these calls. 95% of employees potentially don't understand your strategies, and then 90% don't understand the key metrics or measures. Well, what are you going to do as a CEO? Now, you look at Mr. Anderson as a CEO, global headquarters, German company, about 50 billion in revenue, euros. One of their key, I love this kind of their model, health for all, hunger for none. As you think of their business, they have different segments. Of course, we're very familiar with kind of their consumer health group. Bear aspirin, if you're familiar, all the consumer products they provide. Of course, pharmaceuticals, as well as crop sciences. So that's that hunger for all, figuring out how to produce crops that will feed the world. Almost 100,000 employees as of March of this year. So you think of those stats, you're running this large corporation, you're having some ups and downs, some challenges here and there. Well, the real question is, what is it you want your employees to understand? What is it you want your customers to understand? How about the shareholders, those that are invested in your company, and then any sort of kind of partnerships? Well, folks, that's really what these calls are all about. Now, they're not required to do these calls. They will do a quarterly call as a chance to do a few things. Number one, they want to communicate to the market. They are required by law to submit to whatever trading organization they're a part of, their financial performance. They've got to get that information back to investors as well. Here in the United States, that's issuing submitting submitting your information to the Security Exchange Commission. International location, you got international markets where you do the same thing. Well, rather than just submit that financial information, I want to be able to communicate my message as a CEO or CFO. I want to make sure that analysts understand kind of where we're at, where we want to go, and how we're going to get there. I also want my investors to understand. Now, typically what they'll do is they have this available to anybody, so any of their employees can have a chance to review this, but it's also a place that they will then do an internal communication with their internal team, town hall meetings, communication through videos, etc. They send to their team. The whole goal is to help people understand kind of what we're trying, where we're currently at, what we're trying to do, or where we're trying to go, and how we're going to get there. So for our purposes of our conversation today, is I'm going to do two things. I'm going to give you a framework, a process, and tools. Then I'm going to do that in the context of looking at Bear Group. So this tool can be used on any company. We're going to look at this organization that's very focused on health for all and hunger for none. Now, as I said earlier, I've been a part of Acumen Learning for about 14 years, and I can't think of a better thing to do. Now, you think about learning and development. How in most organizations, there's three areas of focus. One, they want to focus on understanding yourself, so leading yourself. This is where you're doing like Myers-Briggs, DISC, Strength Finder, all these assessments to understand myself as an individual, personality-wise, a leader, a sales professional, etc. The second part is leading others. So how do I engage a team? How do I set clear goals and objectives? How do I help drive results within the organization? So communication, feedback, delegation, conversations. How do we get better at that? Well, the third part of learning and development most organizations focus on is leading the company. Now, folks, I've been doing this for about 28 years in various organizations. I spent a lot of time, about half my career was in leading self and leading others, as was described. I got a PhD in organizational psychology. I try to figure out why people do what they do in organizations. Well, this third piece, being able to see the why we're doing what we're doing with an organization, this is a game changer. And my experience over 14 years of doing this is once you can you're already good at understanding yourself as a leader, understand how to lead people. Once you can understand how to lead the company, understand what the key metrics are, which way they should go, what are the levers you can push or pull, be able to assess strategy, and then with your functional expertise, help us make the right decisions. It absolutely will build your credibility. It will absolutely build your career, and it'll drive your company. So in the next kind of 40 minutes or so, my goal is inspiring to say, you know what, I can do this. And then go do this on your own company. Do it on a company you're interested in. Do a company that you're selling. My guarantee, you do it 2 or 3 times consecutively, you'll get this information. It absolutely will build your credibility, build your career, and build your company. So that in mind, let me give you a simple process. The process is we're going to prepare for it. You got to analyze and apply. So let's jump into the prepare phase. In the tool that I'll give you at the end of our program today, it's going to quickly describe what an earnings call is, kind of earnings call 101. I'll give you 30 seconds on it. Basically, these calls happen on a quarterly basis. They're not required to happen. That being said, about 99% of companies that are publicly traded will provide something like this. Now, they're typically formatted in an initial kind of prepared remarks. This is where the executive team get a chance to communicate their strategic objectives, communicate kind of where we were, how we performed in the quarter, but then be able to say, but where do we want to go and how are we going to get there? That's typically the first portion of it. Now, the most common, you're going to have your CEO normally and a CFO. On Bears, they also have their 3 line leaders that are engaged. So pharmaceutical, consumer products, and crop sciences. So those individuals are on the call as well. In fact, each one of them had a chance to talk. That typical prepared remarks is somewhere between 20 to 30 minutes. Then it switches over and you do a Q&A. Now, the Q&A is not you and I asking the questions as investors. This is literally large investment firms, Barclays, Wells Fargo, all these major organizations, analysts that are tracking their stock will get a chance to ask questions. Now, their whole purpose there is to kind of clarify, because what they're going to do is they're eventually going to write a report to recommend to their investors. There's kind of 5 recommendations, but the key most common is buy, hold, or sell the stock. So they're trying to clarify what's going on and try and predict what's going to happen. The calls typically, a short one would be 45 minutes, a long one's going to be over an hour. There's somewhere usually around 50 minutes to an hour is most of those. So in your preparation, what should you do? Well, the first thing you've got to do is you got to locate the call transcript. So what I'm going to try and do here is I want to show you just quickly how to access this information. Okay, so I'm going to jump to a different screen. You should see it on your screen. So the easy way to do this wonderful website, you may not have heard of it, it's called Google. You just type in what you want to find. So type in Bear, and I want their kind of earnings. I want to see what's happened on their earnings call. You'll notice I start just by typing Bear's earnings. It got earnings call, earning report, earning trends. You can pick any one of them. I'm just going to do earnings call. Okay. Now what you'll see is immediately Bear specific information is coming up from their company. Every publicly traded company has a place on their website where they report their financial performance. I always want to go to the company specific because that's going to be the latest and greatest. Now, there's a number third, you'll see a third party right here, Bear, you got Yahoo down here. Some other ones, Seeking Alpha, Motley Fool. These are all different companies. So there's Seeking Alpha right there that will do that. But I typically want to go to the company itself. Now you'll see right here, it's made it really easy. I'm going to go to Q3 because that's the most recent quarter. I pull it up. I jump right there and it's all there. You want to listen to the call. Now, if it's prior to the call, you'd click it and say webcast. You click on it, you can actually register to participate. Now, if you can't make it, no worries. They record it. If I click there and log in, and all they'll do is ask for an email and your name, then it will give you access to a recording. Their presentation. So here's their slides, everything they talked about. And I love the slides because they summarize. So here's Bill's kind of where he started to talk. And here are the slides that he spoke to. Delivering sales growth, earnings, and cash flow. That's our top strategic priorities. So kind of the slides that he used. Then their CFO, etc. So that's a great resource I love to get access to. Obviously, kind of their financial performance. You're going to look at their financials. They'll have kind of the highlights of their financials, but the actual statements themselves you'll get in here as well. So right here, we're looking at their income statement, for example. So folks, that's how you get it. Now, if you're going, the things you typically want to look at is if they have some sort of transcript. This is actually word for word what was communicated in the call. Here's Bill's communication, exact words, what he said. And eventually he's got his team communicates, and I'm going to jump all the way to the bottom. Eventually you get to where analysts are asking questions. So here you've got analysts asking questions to the executive team. Now, of course, before the call, you won't have that. But once the call happens, many companies have the transcript. Now, don't worry, if they don't do it for you, there's a number of third-party companies that will do that. So if they didn't have a transcript, I would type in Bear Q3 transcript. That would take me to Motley Fool or take me to Seeking Alpha. That's the one I like. I use Seeking Alpha quite a bit. And I can download word for word what was communicated. So folks, that's how you access it. Easy as can be. Just type in the name of the company, type in what you're looking for, and it'll take you to where you need to be able to get that information. So let me jump back to our slides and let's jump into the next step. So first thing you got to locate, if it's prior to the call, you register and then you go listen to the call. If it's after the call, you go find the information and you can do this review. Now, the next step of this prepare phase is to review your notes. Now, you might be saying, what notes are you talking about? Well, if you haven't done anything, you won't have those notes. That being said, if you wanted to, you could jump into Q2 at Bear 2024, and you could kind of review what they communicated before their Q3 call. But once you've done this and actually go through and use the tool, the tool itself becomes the notes you review. So let's imagine you come and you do this on Bear for Q3. Well, here in about, basically January or early February, they're going to have their full year numbers. So if you go and do this on Bear, then when you get ready to listen to their annual report, well, you just quickly come back to your sheets and say, okay, so what were their key strategies? What were their challenges? How did they financially perform? Then when you're listening to the call, you kind of have that context. What we said we were going to do at the end of Q3 versus what we actually did. So that's the reviewing of the notes from past calls. The last thing is meet with your team. Now, we recommend the real value of learning this is do it with your colleagues, your peers, your direct report. If I'm a leader, I get my team together and do it. If I'm an individual contributor, I may talk to a colleague. Maybe I talk to my boss. Hey, could we come in and do this exercise together? In the end, being able to bounce ideas, learn from each other, it's a great way to do it. Listen to these calls is to do it with somebody else. So, folks, that's the prepare phase. You got to locate it, you review your notes, and then you get with the group to go through the analysis together. So let's jump into the analyze phase. And that's the core of what you're going to try and do. How am I going to get clear on their strategic focus? How am I going to get clear on how they perform? That's what you're looking to do. Now, in order to do this, I want to introduce you to this simple framework. Now, those that have been in our classes, this framework will be very familiar to you. So make sure you have your chat box open and help me as we kind of do a quick high level on the 5 driver model. Learning, we would suggest that there's 5 fundamental drivers of every business. Those drivers are cash, profit, assets, growth, and people. You'll see them right here on our slide, right? In our class, we define each driver. We talk about why it's important. We talk about how a company measures that driver. We talk about kind of key strategies around that. But most importantly, we talk about what are the levers you can push or pull to impact. So we talk about cash in business. Help me out in my chat box. If you talk about the importance of cash, there's a common phrase. Cash is blank. Fill it out. Put it in the chat box. Cash is, what would you say? Cash is king. Cash is king. Come on, let's get more balance there. Cash is, somebody say queen. Royalty. I love that. Cash is oxygen. That Ron Sharon says that. Cash is a company's oxygen supply. Cash is vitally important for a company. And then if you want to understand what's going on from a cash perspective, you're going to look at that cash flow. So cash is king, queen. It's vitally important for a company. That being said, most of us don't wake up in the morning and say, I hope to drive more cash today. We might be saying, I want to sell more. I want to be more efficient, generate more profit. I want to have more volumes of production. In the end, the outcome of all those is driving cash. So whether you like it, whether you know this or not, you're either being additive, neutral, or detractive to the cash performance within the organization. So being able to assess what's going on from a cash perspective is vitally important. Now, profitability, if you want to talk about, if I was to give you 2 levers, the most important levers have an impact on every single one of these drivers, it's actually the profit drivers. I call it business 101. If I want to grow profitability, there's 2 levers I can do to drive profitability. I got to increase one lever, or I decrease the other lever. For those that have been through our class, if I want to grow my profitability, what are those 2 levers? What do I have to do? Increase what and decrease what? Put it in our chat box for me. I want to grow profit. Okay, yes, I want to increase my revenue, also known as sales. There's only 2 ways you can increase your revenue. You sell more of your product or service, and or you sell it at a higher price. Then I want to reduce my expenses or costs, or sometimes your executive team wants to reduce your operating expenses. I want to reduce my expenses. Well, folks, I know that's a new concept for most of us, reduce expenses. Hopefully you see the tongue in cheek there. This is probably the biggest lever. Why it has a significant impact on the business. Not only is it going to impact profit, assuming you collect it, it'll impact your cash flow. As you look at how well you utilize your asset, it's often based upon the return you're generating off of assets, equity, invested capital, etc. So these 2 levers, increase in revenue, reduce costs, have an impact on every single one of those. The biggest one, many of us can impact, every single one of us in the company can impact this one. And that's what our executive team focus on. That being said, your good business acumen tells you this cannot be the only lever. You can't cut costs to long-term sustainability. You've also got to drive revenue. Now, our balance sheet's all about what we call asset strength. How financially strong are you versus how do you take that strength and deploy it and utilize their assets? So how well are we efficiently and effectively using our assets to drive what? Profit and cash. Growth is then what investors expect. And our people, we talk about our customers, those that buy or use our product or services, but also people is the lever of how we execute. How well do different functions within an organization drive towards results? Well, folks, that's a simple review of the 5-driver model. Now, you know it's not rocket science, but we can now use this 5-driver model to make more sense of these earnings calls. The first way we do that is what we call the executive alignment tool. The way this tool works is as you listen to this call, rather than trying to summarize everything that gets sent to you, what you're going to do is you're going to say, okay, I'm listening to the call and I'm listening specifically for what are they saying about cash, profit, assets, growth, or people. Now, for some of you, you said, Brent, I haven't been through one of your webinars. I haven't been through one of the classes. That's okay. In the tool itself, we provide a resource for you. If you want a quick definition on what we mean by cash, it's right there. Not only that, the second part is what are the typical terms, or I call them trigger words, you should be listening to. If you hear these words, then you know you can put a line for cash. For example, if I hear dividends or distributions, stock buybacks, debt, issuing stock, I'm going to be putting slash marks like this all throughout, okay? Now, if I'm down here, I hear stuff about sales, revenue, pricing, volume. I'm going to be slash marking here, right? Now, what you might see is they say EBITDA is up by 20%. Well, I'm going to do EBITDA because that's a profit metric. I'm going to go right there, but that's also growth. I'm going to do it right down here. So imagine you're listening to this call and all you're doing is trying to track what are they talking about. Then at the end of the call, you answer these simple questions. Which business drivers seem to get the most attention? I love the second part of it. And why? When you think about the why, think about who they're talking to. For example, if they're talking to analysts and investors, you're going to see growth as a conversation, profit often, cash and assets will play in there, but growth for sure. Whereas if you're talking to the internal team, if our senior executive talking to our team members, you're going to hear a lot more about people. So who are they talking to is one of the whys. What's going on in the market could be one of the whys. For them at Bayer, for example, weather conditions. We talk about their agricultural sciences. Weather impacts what's going on. Regulation impacts what's going on for the pharmaceutical, ag science. For all their products, you're going to see regulatory requirements. From there, what were the 2 or 3 key main points the executive was trying to make? Then from there, so what are they saying about the future? So here's their key points. Well, what are they saying is going to happen in Q4 or next year, 2025, for example? And then because it's an earnings, we have this question as a way to say, okay, what are the analysts saying? Now, folks, a lot of times CFOs or whatever say, just listen to the prepared remarks. Now, I agree. That's very valuable, and you want to at least start there for sure. That being said, here is the value of listening to the Q&A portion. This is where you see whether or not the market's buying what the company's saying. Meaning, if an executive communicates something about growth and investment and they're going to expand, and analysts look at the financial statement, it looks like they're not really doing a whole lot of capital projects. And the analyst is going to say, well, wait a second, you keep talking about this, yet I notice your capital budgets are going down. So the Q&A really gets to feel, are they saying, yeah, I can see this in what you're saying, or no, they're questioning that. So it's a great way to assess how the market might view their communication. Now, after the call, another thing you can do is just do a quick look what's going on with their stock price. After the call itself, it's going up, going down. Now, sometimes don't just read just because it goes up. That means it was a good call. You got to recognize what else is going around. For example, the election. We've had a real ramp up recently with the election on the stock market, right? And just before the election, you kind of had it kind of flattened a little bit cautionary approach to the stock market. So in the end, though, doing a quick check, you can see what's going on. Well, folks, that's the tool. We don't have time. We've got 29 minutes left. I don't have enough time to go through the whole process. But let's just practice with 2 quotes. So I've got 2 quotes, and what I want you to do is open your chat box. And as I read through them, I want you to type as many of the drivers you hear or you hear being communicated in the 2 quotes that I have here, okay? So I have your chat box open. Here's the first quote. This comes from their CEO, and here's what he said. We expect our agricultural market to decline, what driver? Around 2% this year. Given that hitting those numbers is no small feat. So yeah, for sure, this growth is, and it's the opposite. It's decline, right? But it is a growth factor. Now, eventually you'd want to say, so what's causing that? But they're expecting growth in their agriculture market to go down by 2%. Well, what else are they saying? Year to date, pharmaceutical is up. What driver? Pacing with a guidance we upgraded last quarter. So they did an upgrade on their pharmaceutical, and we see that even continuing to perform well. So growth there as well. In fact, we're confident that we'll deliver on our upper end of the upgraded guidance for both sales and earnings. Okay, so what drivers there? There's multiple drivers there that you've got. You got growth there, but what would sales and earnings be? Profitability. Absolutely. You've got it. Now, folks, don't get too caught up. If you were thinking, well, hey, sales and earnings could be cash, you're correct. If you increase your sales, you reduce your and increase your earnings, eventually you'll collect that. That will increase your cash. The two that are the hardest to distinguish is cash and profit. That being said, for me, anything that has to do, that's where the sheet, you'll say EBITDA, sales, revenue, earnings, that's going to be profit. Well, consumer health is growing through not at the rate though not at the rate we expected, given a slowdown in some markets, particularly in US and China. Go ahead and put what drivers there. Still, our performance in pharmaceuticals and consumer health is offsetting some of the declines in crop sciences. Now that's interesting. There, you got three different segments of the group. So definitely growth. Well, what would pharmaceuticals, consumer health, and/or crop science potentially be? Segments of their business. So you could look at people. It could also be their assets, how they break up their assets. They've got pharmaceutical and all the investments in those assets, consumer health. So assets could potentially be there as well. Clean EBITDA, another way of saying this is adjusted EBITDA, will come in the lower due to the headwinds I mentioned. So what driver there? But as a group, we're fully committed to hit our full year targets on sales growth, core earnings per share, and free cash flow. So what drivers on the last one? There you go. Yeah, you got well, when it says cash flow, that's easy. You got cash there, so we're starting to see cash. Earnings per share, that's typically a profit one, growth, etc. Now, what do you see? You get just in this one quote, you're seeing some themes already stand out. Definitely growth or the lack thereof, and potentially some of these others. Well, let's go to the next one. This is from their CFO. I'll let you read through it and just start jotting them down. He gives a lot of metrics here, so just put them in the chat box. Which drivers are they talking about? Just kind of read through it on your own, put in the chat box. Which drivers are you seeing? Absolutely. We're seeing some profit. We're seeing some growth. I mean, again, sales increase slightly. So there's some growth in that. We're getting EBITDA. That's a profit one. Yeah, growth and profit seem to be pretty consistent there, or the lack of growth. Boy, I don't know what's going on. My stuff's jumping around. Whoa. My computer doing something. Okay. Anyways, yeah, so a lot of growth, a lot of profitability, margins down there. What would that be? Margin is often a profit metric. It's just another form. It's basically a percent of revenue. So a lot on profit, a lot on growth. Well, folks, you can see how that works. Now imagine you've done this and work through the whole discussion. Your document might look something like this. And for me, the ones that really were standing out was my profit and growth, those two metrics. So then you go in and you start answering the questions. Since we don't have time to go through everything, what I want to do is I'm just going to share you what I saw, what I noticed in the call. So the first thing I noticed is definitely profit and growth, or the lack thereof. Now, why? What were they talking about? Well, one of the big things is their profitability. Their key profitability is EBITDA. Extra credit, by the way, if you put in the chat box, what does EBITDA stand for? I'll give you the first two. Earnings before. Extra credit points, if you can tell us what that is. A key profit metric speaks to how profitable are they on the things that they can control. Number two is their pharma revenue mix. So one of the things is one of their key drugs. I got to remember how to say this. It's Xarelto, I think is how you say it. It's gone off patent in 2024. So that's impacting it. So they have these other products. One's a blood thinner, and then the other is a kidney drug. They're hoping that makes up. Now, you got to understand pharmaceuticals. Unless you're a generic pharmaceutical manufacturing company where you're just doing like a Walmart, selling as much as you can. If you're going after patents, you always got to have that next patent, because your patents are typically a period of time, I don't know, 7 to 11 years or whatever. But when one goes off, you better have something in place. Otherwise, your margins are going to get hit really hard. And that's what's happening. One of their key drugs has gone off patent. And so these other ones, getting them in the market to where they're really being able to make up that difference is a big one. The last thing is they've had some issues in their crop science division. So they actually wrote down the value of their assets by $3.8 billion, which is impacting their profitability. So as you look at that, let's just see some of the numbers. What's going on? As you talk about profitability, that top line measure, as you take out the impairments, as you take out foreign exchange, they'll say it's a 1% increase. But actually, what's going on because of foreign exchange impacts, as well as the write down of some of their assets, they're not selling as much. The numbers are down. Their EBITDA, these are actual numbers, their core earnings per share, as well as free cash flow, all fairly negative. Okay. So automatically you're recognized. Now, these two right here for me are going to be profit. This one also is a profit. Down here, that's going to be a cash one. But why are they talking about it? Because their performance hasn't been as strong as what they want. Yes, thank you. On the margin, it's percent of revenue. I think that's your question there. A percent of revenue. So you take the profit dollar, divide by the revenue amount, you'll get that. Great question. So one of the reasons they're talking about is because right now their numbers aren't as strong. Why? Well, they've got a drug coming off patent. They've got other ones in the market, and they're doing fairly well considering some of that. But then you have some headwinds in their agricultural science group, and that's had a pretty significant impact. So last thing, so what are they doing about that? A lot of emphasis on cost reduction. Management highlighted ongoing restructuring efforts. They call it DSO, dynamic. I've got it somewhere in here. Dynamic DSO ownership. I can't remember what it is, but I'll find it. If anybody remembers what DSO, if you read it, remind me what it's not. Day sales outstanding. This is their operational. It's dynamic shareholder ownership or something like that. I'll look at it here in just a moment. For the business to overcome the challenges they're faced with. And so as you look at that, where do they want to go with it? Here's some of those numbers that they're looking at. They're actually seeing for 2024, if you take out the impact of foreign exchange, just to give you a clarity. So they report in euros, and the US dollars up until recently was really low. It was like 90 cents on a dollar, I think, if I remember right, in like Q3. It's now at 95 cents. So a US dollar is 95. Is it cents? 90.95 of a euro is what it is. So they've had a $1.2 billion impact just because foreign exchange. So all the sales that are happening in North and United States in US dollars, when it goes back and they convert it to the euro, they're getting a $1.2 billion decrease. So that's tough to control. You can't really control that. So considering they're going down 3 to 1%, if you take the foreign exchange rate out, that's pretty decent there. But real impacts on profitability numbers. So the restructuring, revitalize. Now you'll see this when a company's struggling, they will talk about growth and they'll say, well, we're going to restructure, we're going to reorganize, we're going to downsize. The whole purpose of that is once we get to the other side of this, we are now ready to grow. So even when a company's struggling, you're going to see growth as a key metric and measure. Tough quarter, so they're talking a lot about growth and challenges around profitability, which leads into, so what are the key messages? What were the it's a tough year, so what do they try and say? Well, one of the things is this idea of resilience amid challenges. What are some of the challenges? Well, the crop science group, they've had some weather issues in Latin America. So sales were down, a number of impacts there. The write-downs of some of their assets in their crop science group as well. This resiliency in their pharmaceutical consumer, particularly in the launch of their 2 new drugs. This is a blood thinner, if I remember right. This is for kidney disease, which offset the decline as they go off patent with Xarelto. So what are they expecting this? So it's kind of like, hey, we're kind of being resilient in the challenges, but really speaking to, well, what's going to happen in the future? So kind of this future readiness. They pointed to the promised pipeline of some additional drugs. They're at very late stage that potentially are going to be new patentable drugs, and they're creating kind of some momentum around those drugs. So real long-term growth opportunity kind of mitigate some of that generic erosion. And then this operation, there it is, dynamic shared ownership model, helping employees understand the why behind what they're doing and how they can drive towards results. This is basically why I have a job. We go into companies and help them understand the why behind what company's doing, and then with their understanding, say, what are the decisions we should make within my function to drive towards company results? That's what they're doing. Now, some of that is right-sizing the ships. They actually reduced they had a reduction in workforce. Being better about their agility, be able to make decisions quicker was a big part of that. So those were kind of the key messages. We're being resilient, even though we got challenging times. So yes, challenging times, but hey, we're resilient. Here's what we're trying to do. We believe our future is bright, kind of this future readiness, and here's some of the operational things we're trying to adapt. So what were the 2 or 3 goals as you say, okay, so what's the future look like? Well, the big emphasis is right here and what they communicated. And I'm going to read word for word what he kind of says. I think it's important. I don't have a slide, but I'll just read it to you here. On our 2024 guidance, we will hit numbers on sales growth, core earnings per share, cash flow, and net debt. Strategically, we made progress. We've rapidly scaled the new model. We're leveled up the pharma pipeline with great speed, but we also have more to do. We got the litigation uncertainty to contain, and we have a teamwork working on it. We've got operational performance, this DSO. We're always striving to be more competitive. And in the crop science, they've got lots of stuff going on to kind of mitigate some of those impacts. And consumer health continued with robust organic sales growth and build trusted brands. So basically, this is kind of a message. Yeah, it wasn't the best quarter for them, but let me tell you what we're seeing. And this was his statement, our clear path forward. Now, why do they say that? They want to communicate to the market. We know it had some headwinds. We know that one of our key pharmaceutical products has gone off patent. We know some of those issues in Latin America with weather issues, as well as some of the legal things we're dealing with. Here's the things I'm going to do, and we've got a clear path to continue to build and grow our business. So a big emphasis on these 4 items: deliver 2024 and advance our strategic priorities. Pharmaceuticals proceed to renew our pipeline and progressing our pipeline. Crop science, accelerate our strategic identity, prepare for launches and address market pressures. And consumer health, robust organic sales growth by building trusted brands, etc. So that's what they kind of communicated. So if you're to summarize, what have we heard? Well, we got some things that are kind of mitigating our growth, but we have some challenges, particularly around the crop sciences group, and the fact that our one of our main drugs came off patent. So we got new pharmaceuticals that are hitting that superstar kind of classification, top well-known drugs and a couple drugs, but really building out that pipeline to have continued growth and opportunity. So what did the analysts talk about? There was a lot of questions around kind of the crop science. Now, remember, they wrote down their assets by about $3.8 billion in this segment of the business. You take that big of a write down, that's pretty significant impact. And so the markets wants to clarify, hey, have we cleaned it up? Are we ready to move forward? Is there any other risk we should be aware of? So really focused around the sustainability of some of the challenges they faced there. For the pharma communication, really it's about timing around that. So you have this major blockbuster drug, and these ones are starting to hit that blockbuster status. But really, the question is, it's almost like you're replacing. When do we get back to growth? And really, if you listen to their pharmaceutical senior leadership, there's kind of this, 25 or possibly 26 being a transition. Basically, you've got this drug that's going off patent. These two potentially are going to make it up. When are we really going to get to that next growth level was their communication. And then the last was kind of this impairment as well as cash flow. Now, impairments don't impact their cash. It impacts their profitability. But the cash flow as well, making sure if you're having challenge, there's a lot of money that goes out in this pharmaceutical. There's a lot of money that goes out in R&D for crop sciences as well. So do you have enough cash flow being generated to fund that? You have to borrow, you have to divest assets, et cetera, to get to it. So questions around that. So folks, that's the the executive alignment tool. Let me jump to the second tool. That helps us to get strategically what we're focused on. Let's keep score. Let's see how they did. Now, this tool is a very simple tool. Now, what I like about it brings the 5 drivers, the key metrics, as well as the financial statements into one place. You don't have to have gone through one of our classes and been instructed on all of this. Now, of course, we'd recommend it be valuable if you did, but you can get a lot of value just by using this tool. Here's how it works. Basically, what you're going to do is you listen to these calls, you get access to the financial statements, and these are some of the most common metrics companies look at. The first section, you're going to see the key metric we're looking for. Not only that, you'll see what line item you want to look for in the financial statement. Now, the genius of this tool, in my opinion, by the way, I didn't generate it, I didn't create this. I just think it's a great resource. It tells you where to go. So, for example, if I want to get my cash and cash equivalent, what statement, put in my chat box, what statement do I need to go find? If I want to find the cash and cash equivalent based on this tool, what statement should I go look for? Excellent. It's our balance sheet as well. Versus cash flow, I'd go look at the cash flow statement. Okay. So here's what I want to do. We don't have time to go through it all, but let's just do a couple together so you see how it works. And then we'll wrap up this analyze phase. So let's start with the first one. We're going to get our cash and cash equivalent. Now, you don't have this statement, but many of you just told me we're going to the balance sheet. So let me show you that. Let's go to the balance sheet. The line item we're looking for is cash and cash equivalent. Now, because Bear is an international company, they use what's called International Financial Reporting Standard, or IFRS. So you're going to find cash and cash equivalent in the asset section. It's usually at the very top on a GAAP statement. It's in our current assets. It's going to be towards the bottom of our current assets. So tell me, how much cash did they have on hand as of September 30th, 2024? Put in the chat box. See if you can see that. So we're looking for cash and cash equivalent at the end of September 30th, 2024. Excellent. So there we go. It's right here. If you didn't see it, it's right here. 4,619 euros. Okay, million euros. So 4,619 million euros. Okay, let's do the next one. Based on my tool, what statement do I need to go to find my cash from operations? Let's just make sure we're comfortable with the tool. Excellent. Thank you, George. Our cash flow statement. You don't have it. I do. Here it is. We're looking for net cash provided by operating activities. This is the line item. We're going to do, we're doing the quarterly one because I'm doing quarterly right now. So I want to look at the quarter. How much cash did they generate? How many euros did they generate in Q3 of 2024? Put in the chat box if you see that number. Excellent. Okay. If you didn't see it, it's right here. 3,753. Now look at the difference from a year ago. Huge swing in that. If you had more time, you'd want to dive in. So what caused that? Really good cash generation in this quarter. Now notice, I'll just show you something kind of interesting. Notice this. For the full 9 months, it's actually less than what they had in Q3. Put your business acumen hat on. What does that mean about Q1 and Q2? If this If this is bigger than the full year, that means you had negative cash flow, at least potentially one of those quarters, because you're actually reducing the net amount of those first 2 quarters. You reduced your cash flow by about 2.3 billion euros. So a big swing. So Q3 was a strong, Q1 and Q2 wouldn't have been strong. You can see that in the numbers. Anyways, that's for our next lesson here. So our cash flow generation. Oh, we got the wrong cash flow here. Oh, we got the. Oh, I was doing investing. Yeah, I was wrong. Sorry, folks. I lied to you. I didn't read that. That's investing. I lied to you guys. It's right here. 2111. So forget this whole conversation about that. I was looking at the wrong line item. So right there, 2111 is how much they generate. So it's actually down from a year ago. Forget everything I just said about that. My apologies. Here you go. 2111. Okay. Well, the last one I want to do is we're going to do these 3, and we're going to do them pretty quick here because basically these 2 are the line items you need to calculate this. So let's start with total revenue. Just last couple uses of the tool. What statement do I need to go to get my total revenue based on my tool? Excellent. We want to go to that income statement. Everybody should see that's right here. Basically, all of these are going to be from there. So not only do I have to get my total revenue, I get my net income both from there. So I advance it. I get my total net revenue. Now, we call it sales is the number that we call it. And I want the quarterly number. So we're looking right here just to make sure we're comfortable. What was their net sales in Q3 of 2024? Put in the chat box. Net sales for 2024 were, oh, thank you, Robert. Keep me going here. And then let's also do, since we're here, let's do net income attributable to our stockholders right here. So you take this number, divide this number. That's going to create a margin for you, okay? So if you jump back, here's the numbers. Oops. You take the 4183 negative divided by how much revenue you generated. For basically, what is this telling? For every $100 they brought in their company, they had a 42 euro loss in the first and Q3 of this year. Now, a big part of that loss is, remember, they took a $3.8 billion impairment. So that's why you have this huge impact. Well, folks, so yeah, not a best quarter for them. We know why, this impairment that they took. Well, here's the rest of the numbers. So here's the rest of the numbers. You see the revenue's not going up. So we were down year over year. We got a negative net income, pretty significant because of that impairment. Now you can look at it. Well, where were we a year ago? You also see significant decreases here. Well, so not only do I know they had a tough year, and here's what they're saying they're going to do about it. I can see their numbers. Now, a couple things you'll notice, though, is your net income growth. It's not as bad of a loss of where it was because they took an impairment the prior year as well. So they had two impairments over the last 2 years. Pretty significant write-downs there. Well, folks, you can also use this tool to do it on a year-to-date. So here's their year-to-date numbers, the first 9 months of 2024 versus the first 9 months. You can compare and contrast to see what's going on. You can also use this tool and look at any company. So last month we did Visa. You're looking at Bayer, the company that they are, pharmaceutical, consumer products, and agricultural sciences, crop sciences, versus a credit card services company. Very different metrics and measures as you look at that for sure. Well, folks, that's the analyze phase. In the last 6 minutes, I want to just wrap up with, so what do you do with this? Folks, the most important thing you've got to do is once you've done this is say, what am I going to do about it? And that's the applies phase. That's really what business acumen is all about. That's what we do. That's why I have a job. We help employees be able to improve the performance of the business or the function. We help them to increase how well they collaborate across organizations to get greater efficiency. We improve upward communication, improve employee engagement, increase business focus, and improve teamwork. This is a study that was done by a third-party group working with one of our clients. Now, the reason I think we get such good scores is not because of us as facilitators. Here's what it is. Once people understand the why behind what they're doing, they're absolutely empowered to go back to their role and say, what can I do about it? Versus if I'm so focused on my role and I rarely understand the bigger picture, I'm not connecting the dot how my performance drives the success of the overall organization. That's what these earnings calls can allow you to do. So the last phase is to apply, to know something, to now know they had a tough quarter. Here's some of the things they're trying to do. I can see their numbers aren't so good. Then say, what can I do about it? That's the next step. So for me, I'm not an employee of them, but a few key insights that stood out to me. Number one is this profit. They got to get more efficient around cost management as well as driving revenue. So it's not just cost management. They got to drive revenue as well. That being said, if I was an employee, I'd think about how am I impacting costs and how am I help driving revenue. Portfolio diversification. They have a big swing down with their agricultural crops business, agricultural science. But the fact they have pharmaceutical, even though they had their key product dropping off patent, they have others kind of replacing, kind of flattening that out. But if they can get that pipeline going, that can drive other business. The idea of having 3 segments of their business, you can kind of, the diversification allows you to weather kind of up and down things that might happen. Urgent need for product innovation and market differentiation is a key part of what kind of stood out to me. This idea of dynamic shared ownership. How can we all drive the business? This is a company. Often people think, when should I bring business acumen into my organization? Well, it's when, hey, we're doing great. We have a lot of money to spend on training or development. I would suggest one of the best times is help people understand your business and how can they help you overcome some of these challenges. So dynamic shared ownership, we want to partner with you and help you to see the big picture and then be able to help make those decisions. And then Bears kind of long-term, be able to communicate clear long-term strategies to their stakeholders. If you're not doing very well, you got to really make that business case of why should investors stick around? Well, so what would I do about that? Well, I'm not an employee of Bear. For me, it's helping. This knowledge helps to understand and share how they're performing within their industry. It gives a broader perspective that I could then take to my team, share with my consultants, my clients, as well as new customers, how business acumen can drive results within the organization. Now, as I said earlier, man, if you're from Bear, you happen to find our link or whatever, we'd love to work with you. And I can't think of a better time when a company's having challenging to help every employee to think like a CEO, to think like a CFO. They already have that functional expertise. Help them understand how your business really is focused and then they can go back with their functional expertise, help us make the right decisions. So last step of the tool is to then, once you've done the analysis, go have a conversation. If it's on your company, sit down with your manager. Say, here's my top 3 things I want to focus on. And make sure you're aligned with what they want you to do. Get the support you need. If you've looked at a customer or partner, maybe you get with your sales team or your strategy team and share insights around what you learned about kind of our competitors or excuse me, our customers. And then competitors as well. Depending on who you do, there's different groups you can talk about and make decisions on what you can do to drive results. Well, folks, that's the apply phase. Well, in the last 2 minutes here, here's how I want to wrap up. This is the tool. You got a process, a simple process. You prepare, you analyze, and apply. A simple framework of 5 drivers: cash, profit, asset, growth, and people. By the way, that's not an exact science. You do this with a colleague, you're not all going to get the same slash marks. We do about 1,200 sessions a year, and invariably the top 2 or 3 drivers will go to the top. That's all you need. If you can understand, we're talking about growth and profit, then you can go back and say, what can I do to drive that? That's what you want to try and do. So as we started earlier in the prepare phase, once you've completed this tool, that review your notes, this tool becomes that notes. Imagine you've just done this for Q3. You're in Q4, January, February. You want to look at Bear again. You jump back, see what you said about it. Okay, now let's listen. Let's see if it's progressing. Folks, that's how you really think like a CEO. You've done it 2 or 3 times. You will know as much about what's going on within your company as your senior leaders by doing this. It will absolutely build your credibility. It will build your career, and it'll build your company. So my challenge to you, take this tool and go engage. Look to a company you work with, you sell to, compete against, partner with, maybe a company you want to invest in or you're just interested in. Or folks, come join us next month as we look at EA Sports and see what's going on with it. What is their strategy? How are they performing? And what should we do about it? With that in mind, thank you for joining us today. Here is our link, acumenlearning.com/webinar. Brooklyn's put it in there for you. We're going to look at EA Sports on January 29th. So if you want to register, you can register through that link. You can access the workbook. The tool I just covered is all available. And finally, folks, if you want a refresher, do that self-paced learning. We got a great discount. It's about 33% off, if I remember, about a third of the cost by doing that. It's a great refresher. If you've never done it, it's a great individual. If you and your team feel like this would be helpful for us to understand the why behind what we're doing, then with our team, be more strategic in our decision-making, please reach out to us. We'd love to work with you. Thank you very much for your time and have a great day. Acumen Learning team, was there any questions? I know we had a couple, but I think we hit them as we went. Any other questions? And folks, we're on. If you have questions you want to ask, feel free to ask them. Any questions we missed? Are we good, team?
I didn't see any, Brent.
Okay.
Brent, who knew earnings calls could be so engaging and exciting?
Well, thank you. It's a lot of passion. Hopefully you're inspired enough to say, I can do this. You can.